When you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is a Monday. It's the 2nd. We had the markets moving lower here. Let's turn over to the grain hedge trading platform, see where we closed off the day. Corn down 5.5 cents, soybeans down 18 cents, and wheat in Chicago trading down 13 cents to $5 even here. Let's talk a little bit about why we traded lower. I think a lot of this, particularly for soybeans, has to do with the whole Brazilian strikes. Over the weekend, we saw the police out of Brazil really cracking down on those strike workers, or those strikers, and the blockades. They handed out fines. They cleared a lot of roadblocks. Bottom line here is we went from about 88 roadblocks and blockages in transportation to about 12 here on Monday. So 88 back on Thursday, 12 here on Monday. These corridors are being opened up. That's providing a lot more opportunity here for fuel to get out to these areas that need it for harvest, but also for grain to move to ports. And that's the number one, making sure that the grain is moving to the ports and there isn't delays at the ports getting the grain out of the country. Of course, if there was, we'd probably see export sales pushed onto the U.S. books. But because these corridors are being opened up, takes a lot of that threat away, and what we get here is prices in the U.S. Soybeans moving lower here now with less of a risk of delays down there in Brazil. Let's talk a little bit about export inspections here. This morning we had very positive export inspections for corn. About 1.2 million metric tons inspected for export this week, well above the high side of analysts' expectations, which range from 750 to 900,000 metric tons. So very positive there for corn. Wheat was relatively positive. It was on the high side of analysts' expectations. It didn't beat this week, but it was decent here. 450,000 metric tons inspected for export there. And soybeans coming in shy of analysts' expectations. Another reason why we saw a little bit of selling pressure here in the market, coming in at 634,000 metric tons compared to 750 and 950,000 metric ton expectations. Let's talk a little bit about the damage here done to the chart. You can see what we're looking at is a candlestick chart. Each one of these bars represents 1 day worth of price activity. We're looking at the May corn chart because, of course, March had first notice day on Friday. So we're taking an eye here on those May contracts. And you can see that we had prices move a little bit higher here this morning and in the overnight session. Unable to get up over that moving average, unable to get up and kind of hold that ground that we kind of chopped around in for the better part of February. That is a pretty significant resistance area. I wouldn't be surprised if we're unable to get up over that. I think there are a few things that we need to talk about when we talk about corn. Of course, export sales are positive here, but we have a significant amount of ending stocks, and I think that's the big concern. Whether or not we're going to get the kind of ethanol production in the second half of the marketing year, whether or not we're going to see the feed use continue to pick up here. As we've seen really over the last WASDE report, we did see a little bit of a pickup in that feed usage. So we'll have to pay attention to that. I still think that I wouldn't be surprised if we get a little bit of selling pressure here. The resistance up there seems to be quite strong. Let's look at soybeans. You'll notice tried to get up to that middle side, that middle area of the range that we traded in really from October to January. Unable to get up above that resistance level, but keep in mind that even though we had significant selling pressure today, we still did not break that uptrend, that short-term uptrend that really started the middle part of February and started rallying up over 10. So keep in mind, I think there is going to be support down around 10.13. If we go through that tomorrow, I wouldn't be surprised if we start to really move sideways to slightly lower, possibly going down around testing those lows back in the earlier part of February. I just, when you look at soybeans here, there's just such a big crop down in South America. I think that once we really get confidence that it's going to get to market in a timely manner, that's going to weigh heavily on soybean prices here moving forward. And let's talk a little bit about wheat. Wheat had a nice support back on Thursday. Friday we had continuation bouncing up from that support down around that 496 level. Today we're unable to hang on to those gains. So I wouldn't be surprised if we go down, break through 4, that we start to push new lows for wheat. There just doesn't seem to be a whole lot of bullish news out there for wheat that you can hang your hat on. Ample supply. We do have a little bit of cold weather moving in here at the end of the week, but I don't think it's going to be enough to provide any sort of bullish excitement. We just have ample snow cover in the areas that will be below freezing. So guys, if you have any questions about what I'm talking about here today, give us a call. The number is 877-472-4607. And if you haven't done so already and you want to have live quotes on your home computer in your home office as well as on your mobile phone, give us a call. Number is 877-472-4607, or take a demo at grainhedge.com. There's a 14-day free trial there. We'll reach out to you and make sure you get the training that you need. Thanks a lot for tuning in. We'll see you here on Tuesday.